Good evening. My name is Rudy, and tonight we are going to do a Sharetrackin Basic 3 video. Now, the Basic 3 is going to be about CFDs, how to go and analyze them, more or less the same way as what you would do your investments, and then also how you would go about doing the filtering, and also how to go and buy and sell your CFD trades. So your CFDs has got more or less the same dashboard as your or your trader dashboard is more or less the same dashboard as what your investment dashboard is. There's slight differences between the two regarding if you look at the bottom here, we mention your total margin cost, which is basically the margin of amount that you invested instead of the total amount. So marginal amount, for instance, would be a smaller amount of money that you pay because the bank basically borrows you X amount of money to trade on shares or on CFDs contracts. Now at the bottom you'll also see that the investment dashboard doesn't have the direction, so the direction would be either long or short. So depending if you're trading in an upwards direction or a downwards direction. The quantity of shares that you buy is the same unit cost. Then the margin, of course, this is also different. So the margin is basically the amount that you have paid. So it doesn't show you the exposure which you've been exposed to. It shows you the margin that you've paid. Obviously, that's not the amount you're trading on. You're trading on your profit comes from the exposure. Okay. But we'll get to that in a moment when we start buying some shares. Now, underneath the analysis, you will see that you have your stocks, and then the same way that you go to do your filtering on the for your investments, you go to the additional advisors. Now, under the additional advisors, you have the Sharetrackin 2020 advisor. You can still use the old method of using the long and the stochastic, or the long and the RSI. So that method you can still use that we went through in basic 2. But the Sharetrackin 2020 just makes it so much easier to find your shares, to see if those shares are in a long or in a short. Can you trade them upwards or can you trade them downwards? Now, you'll see that once we clicked on the Sharetrackin 2020, it gave us 2 extra columns. So it gives me the Sharetrackin 2020 column and then also the direction. So on the Sharetrackin 2020 column, that's going to be more or less the only filter you're really going to use is by typing in the word open. And I'll give you all the open positions. So it shortens that list drastically down to, let's say, 10. Sometimes you can even find 20 on this list, depending on which shares went up or down for the day. But it's all about basically what it does is it looks at the stochastic and it looks at the RSI. Are they crossing in a 45-degree angle upwards, or are they crossing down in a 45-degree angle downwards? Okay, so it's either up or down that the crosses has to be. If obviously the cross is up, then your direction would be long. If the cross is downwards, then your direction would be short. Okay, so short positions means that you are initially buying shares in a downwards trend instead of buying them an upward trend. So it means that you're trading against the markets and not for the market. Some people says that, okay, it sounds a bit confusing, but how do I make money in a downwards direction? Reason for that is because it works more or less the same as Forex. I mean, with Forex, you've also got leverages and you've got your margins. You've got a few other things that goes part with it, but you can place a short position or a long position because you're either trading, let's say, for the US dollar or against the US dollar, or for the rand or against the rand. That's the same with the companies. You're either trading with the company on a long, or you're trading against the company on a short. So you're basically hoping that the company is either going to go upwards if you're placing a long, or you're hoping that it's going to go down when you place a short position. And that you'll also be able to see on the Golden Goose, that there is certain parameters set on the Golden Goose, for instance, that you can use to make your decisions as well. For instance, on the Golden Goose, there is a support and a resistance. Now, when the share breaks through the resistance, obviously, then you'll put in a short. When it breaks through the long, when it breaks through the supports at the bottom, then you'll place a short position, and then it's got a potential upside or a potential downside. So you will basically stay in with the potential downside until you reach that downside point, or you would stay in until you reach that upside point. Okay, so just to give a little bit of more explanation on how how the short basically works. Now, we'll see here that we've got Blue Label Telecoms, which tells us it's giving us a long, and then also we've got FFA Fortress Rate also giving us a long, but then we've got one share in between FVT that's giving us a short. Okay, but we'll go through both through the long and the short. Now, this isn't always 100% accurate, so I'm just warning you beforehand that it's not always 100% accurate. So you can sometimes find that a long might have been a short, for instance, or a short might have been a long. Okay, that's why it's good to always go through the shares early morning and see which direction they are going, so that you can also base your decision on where the share is heading. So this is just basically a start off point to get you started. Okay, so we're going to go and click on Blue Label Telecoms, BLU. It's going to give you the same details as what it would give you on any other advisor, your security details, and then we go to Chart IQ. All right, now on the Chart IQ, all right, so now we can see that yes, this share was basically a long. All right, so this was correct. So how do we know that? So if I take my vertical down here, we'll see that we had a crossover down here. Okay, and we had a crossover on the stochastic. So that's a strong, even more than 45-degree angle turn that we had on the RSI, and we had a crossover over there in a 45-degree angle on the stochastic. So both of them gave us the buying indication so that we could have bought. Okay, so we could have made some profit today. So that would have been, your buy-in point for a long. Okay, so that's quite simple. You buy at the bottom and then you go and sell high. All right, but obviously you are hoping for the share maybe to grow, let's say for the next few days, or even for the next week or 2 weeks. All right, so you can hold on to a CFD for a longer time period, but the thing is, remember, with these drops in between, if you put placing along, these drops in between can be your downfall on CFDs. That's also why not a lot of people trade CFDs, is because these downfalls in between, because it's only a certain percentage of CFD traders that really make money on the stock markets. Okay, but if you read it correctly, like for instance with the indication like this, then obviously you won't go wrong. Okay, so for a few days, this share can go up. All right, so let's say for about 4 days, same as what it did over here, about 5 days, 4 days there. So for 4 days, the share might go up again. Okay, so it's got a continuous pattern, and we can already see what the pattern is. It's got a little bit of upside, down, and then big jump. A little bit of upside, down, goes up again. A little bit downside, goes up again, and it's continuing on that trend. So the next one, because we can see that this pattern, these patterns that it's got here, is the same, more or less the same pattern. So what's the next one? Obviously a higher point. Okay, so this one would, for instance, be a good indication of buying now, because it might go up. Okay, so to place that long position, we'll obviously go and click on the share and go to the buy shares, but we're not going to do that immediately. I want to go and have a look at the short position as well, because there might be some potential in the short, all right, for us to buy downwards. So then we're going to go click on Fairvest once again, and then go to Chart IQ. All right, so we've got Charts IQ, and then we can see that this was a short. All right, it's heading sideways now. So the short position that it's giving us is actually the short position that was way over here. So it was on the 5th. So on the 5th, we had a crossover on the RSI, but on the stochastic, you had an early warning that the share is going to go down. All right, so that basically was your early warning when the share was actually trending a bit sideways, but then RSI just confirmed it over there on the 5th. So this one is a little late, but that would have been a short. So you would have placed your order. So you would have opened a position right here at the top at 2 Rand 10, and then you could have closed your position more or less here on 2 Rand. But then again, also another good thing to go and look at is the historical data to see how far the share might fall with the short position, same as with the long position. So you can always go and read up on your historical data. So what I usually do is I pull up the entire chart to see how many short positions, long positions there was during the last few years. All right, and what the jumps are, what the spikes are, and how big the spikes might be. So it's always good to go into the historical data and make sure, is it normal for the share, for instance, to make these sideways trends? And we can see that for the period through 2016, there wasn't much of it. All the way up until 2020, the share did have a big fall. Going back up again, if you look at the historical data, there was a lot of times where the share actually went sideways. So it basically looks like skyscraper buildings if you look at it from afar. So there's a lot of skyscraper buildings in between. So it means that there's some days that this share really doesn't do anything. So this is a normal movement for the stock to do. But because of the overall movement that has been doing for Sharetrack in 2020, I won't really risk too much of shorts on it. If it's a stock that's constantly in a downward trend, then I would say yes, that shorting would be a much better opportunity. But then also remember, not all stocks have CFDs. For instance, if you go through Standard Bank and you pull up a quote on their main page, so if you select your CFDs from the drop down list, and then not fill in the blank, and you click on quote and then list all, it will list all the companies for you on Standard Bank, which you can basically short and which you can open positions on. So for instance, a share like Ankler Mittal, they won't allow you to place any short. I don't even think you can trade with Ankler Mittal as a CFD, but because it's got the potential downside is so big, you won't be able to play short. So that's a good thing to always go and look at the historical data on a share, because most likely a share that's in a constant movement like this, you'd only be able to place longs, for instance, right? Or longs and shorts. It depends on what share it is. Okay, so obviously the market people also look at the stock in general, and that basically determines if the share has short positions and long positions or only long positions. All right. But in the instance of this current share like it's now, I wouldn't risk this because I wouldn't risk a short right now because it's heading sideways. Okay. It can go back up from here, because then it means if the share has to go up from here and if you have to place a short position right now, you will lose money. Okay. Because it means that the share is going to go up instead of go down. Okay. So BLU looks like a better opportunity for us to go and place a long. Okay, so that's what everyone's used to, is trading upwards. I would suggest that for people that's beginners with CFDs, that you only trade with long positions in the beginning until you get used to the idea of CFDs, and then going over and doing shorts as well. Okay, if you've got a little bit more experience, then I would say that if you know how to do shorts, then and also if you know how to read the trends, like for instance, you're converting and diverting trends on your RSI and your stochastic, then I would say that shorting would be a little bit easier for you. Okay, so what we're gonna do is we're gonna take Blue Label Telecoms as an example to go and buy. All right, because there is some math behind CFDs, not like with investing where you just need to be below 4% before you start breaking even. This works a bit different. Okay, so we're going to go say buy shares, and then we are going to go and select our CFD simulation account. Okay, now on the CFD simulation, you'll see that right. Also, not all accounts would be named CFD simulation. I mean, yours might be labeled only as CFD or your name or anything. So on our CFD accounts, for those that don't have an account, I'll just go and show you how to open that account as well. But you'll see that there's a bit of a difference between the normal simulation, right, and the CFD simulation, because you'll see that over here we've got leverage and margin. Now the leverage and margin is or more the leverage than the margin. So the margin percentage, if you're trading through IG markets, then you'll realize that they give you a percentage margin. So instead of looking at the leverage, you will be looking at the margin instead of the leverage. Okay, so when you're trading through Standard Bank, it's a little bit easier. They give you the leverage, so our software will automatically calculate the margin. but every share has a different leverage, right? So not all of them will be the same. So you get a leverage between 1 and 10. So if a share, for instance, has a leverage of 2, it means that any amount that you invest will be times by 2. So if I take one share, for instance, on this, okay, and I say, right, okay, but the leverage is 2, so it means I'm paying 50% of the margin. Okay, so I'm paying 50% of the current share price. If it's a 1-to-1 ratio, you would be paying 100% of the price. So it will be exactly the same as investing. Okay, so then you might as well just go and buy stocks instead of going on a CFD, because it means your required margin and your total cost would be the exact same. Okay, and you don't want a share with a leverage of 1, but I don't even think you get leverage of 1. You only get that on investments. So 1-to-1 ratio, that is how investments work. So it might start anything from, let's say, 1.5 upwards. So if it's a leverage of 2, it means that it will divide your amount that your value, that last trade value, by 2. So it means that it's 50%. So you're paying 50% of the last price. You're not paying full price. If it's, let's say, for instance, 7, it will divide that amount by 7, and it will give you a percentage margin of 14.28%, or 14 point, if we have to round it off, 14.29%. Okay, so we'll not be paying full price. If I say, right, it's a perfect 10, not that you really get a perfect 10, then I'll be paying 10% of the original price. Okay, so this basically determines what percentage you will be paying on the original price. Okay, so let's say it was a 5. All right, so we're going to take what our software is defaulted on, which is 5. But remember, it can differ from share to share. So this can be a 2, it can be a 3, it can be 4, and we're all the way up to 9. So Sibanye Stillwater is, for instance, a 7.4. Right, so just that you know, every share differs. So you will never find that, even though we say that it's a 1-to-10 ratio that you're trading with, it's anything from 1 to 10. Okay, just so that you know. So the leverage, we're going to make 5%. So let's say we're trading through Standard Bank. The leverage of Blue Label Telecoms is 5. We will be paying 20% of the margin, or 20% margin. So it's only 20% of the original price. So now if I take one share, okay, no man, sorry, that's over here. We take one share. It means that I am, come on, I pressed the wrong button. I do apologize. There we go. So if I take, once again, one share, I'll be paying 11 Rand 13. No, sorry, that one share would cost me, this isn't correct. Sorry, I just want this thing to maybe recalculate. I don't think I can take 1. All right, 2. So required margin of 12 Rand, but exposure is then 61 Rand 26. All right, so it is correct. So it's basically just timesing it, basically multiplying the amount of shares. So it's 2 shares multiplied basically by the amount over there. Not that it makes sense, sorry. This is confusing me a bit now, because that doesn't seem to be correct, because required margin, if you go and work it out, 20% on 5 Rand would be way less than what the 12 Rand is. So I'm going to try and change this up. Let's make it 7, and let's take 10 shares, which makes a little bit more sense now. Okay, so 10 stocks, 15 Rand 19. So it looks like if you take the lower numbers, then it bombs out a bit. But it seems that on the number of shares to trade, and if you make it 10 and more, then it works out. So required margin 15 Rand 19. So it means that it's timesing the margin. All right, so the Rand margin by 7, and that's basically giving you 106 Rand and 30 cents. So you will only be paying 15 Rand 19, right, to get an exposure of 106 Rand and 30 cents. If I take more shares, let's say 100 shares, I will be paying 87 Rand 57, but my total cost would be 613 Rand. And also on top of this total cost is a 50 Rand brokerage, right? So we did put in a brokerage on the software now as well. So you will be paying brokerage on the CFD accounts also. So instead of just having a flat fee, so even though you start timing your amount, so if you multiply your last trade price by your leverage, then you'll see that you get a different amount to what it gives you. But that's because the brokerage is included on your total costs. Okay. So we obviously want to push this a little higher. We don't only want a total cost of like 613. Remember, the more you put in, the more your exposure would be. So if I take, for instance, okay, I want, instead of 100, I want 1,000. So 1,000 shares would cost me 811 Rand 43 cents, but my total cost would be 5,680. So the reason for that, basically your total cost going up, or your exposure. So it's not total cost, it's exposure. So the reason your exposure is going up is because the bank is also loaning you an X amount of money. So if you basically go and subtract your 811.43 from the total cost, and also obviously your 50 Rand from the total cost, then you'll see what the bank basically borrows you. So if we quickly take a calculator and we quickly go and work that out, so it's 5,680 minus the 50 Rand, so it's 5,680 minus the 50 Rand, all right, which is your brokerage. Then taking your 811 Rand and 43 cents, and that would be what the bank basically is borrowing you on top of your 811 Rand. Okay, so that's what the bank will loan you. When you sell out, then the bank takes back that amount. Okay, and also they will be subtracting another 50 Rand. Okay, but that's on the software. If you're trading through the bank or through Standard Bank, it's 57 Rand 50 for your buy and 57 Rand 50 for your sell. Okay, so they will be taking that amount plus 115 Rand. So that's the amount they will be taking. So you obviously will take the profit for whatever comes out of the 5,680. Okay, whatever your exposure was, you will be taking the profit out of it. It will be added onto your required margin, but just remember that you need to compensate for the brokerage as well. So the brokerage needs to be subtracted from whatever amount that you're getting back from the bank. Okay, so you're basically paying a brokerage for you when you buy and a brokerage when you sell. So once you've made your decision, you've made up your mind on how many shares, you just need to enter a comment. So on the comment section, you need to realize that you either need to put in 2 technical reasons or 2 fundamental reasons. The rules are more or less the same as what it's on the investment side. Okay, so there's 1 or 2 changes, I think 3 changes at the most on the rules for the CFDs. So for instance, one of the rules is that you're not allowed to invest more than 7% of your total value that you've got left in your account. Okay, so we're going to put in a comment here. So one technical reason, or 1 fundamental, or 2 technical reasons and 2 fundamentals. So we're going to go put in a comment. So we're going to say, for instance, that open position on Sharetrackin 2020 for a long. Okay, so that's one reason, because that's what we saw. And you can also say, yeah, that RSI and STOCH giving by instruction. Okay, that's more than enough reason for us to buy the share. Okay, so then what we're going to go and do is, then we say open long position, because that's what it told us to do. So we say open long position, and it's going to open the position. So successfully open position. So now when I go to my dashboard and then my trader dashboard, if it eventually gets there. There we go. Trader dashboard. Then we'll see that it bought the share at the bottom there. BLU long 1,000 on the quantity unit cost. That's what we paid per share. I'm not really paid per share. Remember, we paid 20% of the share price. The margin that we've invested 861 rand and 43 cents. The current price of the share, today's movement was 26 cents, so it's not 26 rand. So all of these values, ignore the decimals because those decimals aren't true. So it's 8 cents, 1 rand 10, 1 rand of that 16 cents, 2 rand 13, 4 rand 6 cents, 12 cents, and then this one's 26 cents. Okay, overall movement. So overall movement is in rand. So 9 rand 24 is the overall movement on SL32, for instance. But this one will have 0 because we just bought it, and the profits and loss would be in a minus because it already subtracted your brokerage of 50 rand. Okay, so that is what, and then when you sell out, obviously you're gonna again pay 50 rand for your sell. Okay, so we're trying to keep it more or less the same as what Standard Bank does it, but we just didn't include the VAT. Okay, so the VAT is something that we didn't include, but it is 50 rand on the brokerage. Okay. Now, underneath the action, when you want to sell out on the share, you're just going to click on the action button on the right-hand side. You can go and set up your stop losses. So, for instance, I want a target value of 10%, but a stop loss percentage of, let's say, 5%. Then I can just update the values, and that will obviously update my my stop loss. So it would only update these values on this little investment graph. So there isn't any SMS notifications currently on this. It will say setup of SMS notifications are not allowed for CFD accounts. Okay, that's only for the investment accounts. But that is coming in the near future, so we will be putting in SMS notifications for this. So you'll be able to receive either SMS notification for the share, or it might even auto sell on the CFD side. Okay, because CFDs are so much more riskier, we feel that that sending out SMS for it or making it sell automatically would just make it so much easier to trade CFDs on the platform or practice with the CFDs on the platform. Okay, if you want to sell out on a CFD, all you're going to do is you click on close position, and it's going to give you your investment options close position, and it will already have the number of shares to trade. It's not like with the investment one where you need to put in the amount of shares that you want to sell out. It's already there. Okay, you can just put in your comment. So I'm just going to put this in as test. So once again, either one technical or one fundamental reason, or two technical or two fundamental. Okay, so always two reasons when you buy shares, but I think with the selling of shares, it's only one reason. Okay, so no need to put in two reasons for the sell. It needs to be one reason. So it might be because it reached a stop loss, or it might be because you're taking profits on it, or you receive a SMS notification telling you to sell, and then you just click on close position. So it won't tell you sell, it's going to be closed position. Okay, so once I say close position, it will go and close that BLU position for me. Okay, so I did see someone did put up their hand earlier, so I don't. You'll see that on the right hand side on your GoToWebinar, there is a section where you can go and ask a question. So anyone that wants to ask questions on it, I know CVs are a little bit more confusing than what the investment part is, because investments is one way. You put in a trade for a bullish trend, and then you just go with the upward trend on a CFD. But with with the investment, but with CFDs it's a bit different. I mean, yes, it works the same principle. If it goes up, it goes up. I mean, you're trading in a bullish trend. But when it comes to shorting a position, it becomes a bit confusing. And also, you've got your margins and you've got your gearing ratios that also plays a role with trading. But I mean, once you get the hang of working out what the margin is, or seeing what the leverage is, you don't even need to work out the margin. You just need to go to Standard Bank's website, and if you've got an account, obviously, then you'll be able to see what the gearing ratio is, which makes your life so much easier, because you just take that, bring it over to the software, and just type it in. and then put in the amount of shares that you would like to trade. It will automatically work out the margin percentage, and they will even show you the margin in a rand value of what the rand value is that you're paying per share, and not the percentage margin. Okay, but obviously the reason we use the percentage margin is because IG markets gives you the percentage. They don't give you the leverage. They give you the gearing ratio. Well, yes, CFDs is a little bit more risky to what investments are. Look, the thing on CFDs is that, remember, you're not only trading with your own money, you're trading with the bank's money as well. Okay, so because the bank is loaning you X amount, so let's say for instance you've only got 100 rand, okay, and the leverage of the share is 2. So it means that the bank will do what? They will borrow you extra 100 rand. Okay, so then you've got 200 rand in the market. Now what happens is, let's say you lose your entirety of your 100 rand. So not going to keep, obviously not going to keep in consideration their 100 rand first. They're going to keep in consideration your 100 rand that you put in. Okay, because they borrowed you 100 rand to begin with. Okay. So if you lose your 100 rand and you start touching their 100 rand, let's say for instance you lose 5 rand on the 100 rand that they borrowed you, you need to pay back the 5 rand that you lost because you're loaning the 100 rand. Okay, so it is a little bit more riskier that you're not only losing your money, but you can lose the bank's money as well, and then you'll basically need to pay back. So that's what basically makes it a little bit more riskier. If you're looking at percentage growth, it's more or less the same. Remember, CFDs isn't really fast movers. Yes, you can do day trading with it, but then you need live charting for it and not 15-minute delayed intervals. So currently we are running on 15-minute delayed intervals. We're looking at going onto live data as well, so that day traders can go onto it and trade with shorter intervals. Okay, but then it basically becomes a job. So if you're trading CFDs on a longer term, let's say a week or 2 weeks, then it's better to go. It's better to go longer term, basically with CFDs. So 2 weeks maximum. A week would be the recommended, and then don't go and do a day-to-day thing. So don't buy now and then expect that you'll be able to sell later because of the brokerages. Remember, for every trade that you do, you pay a brokerage. Okay, so that also makes it a little bit more riskier if you buy and sell immediately too many times, because what happens then is brokerage on brokerage on brokerage on brokerage on brokerage on brokerage the entire time. So you keep on paying brokerage fees, and you'll come at some points where your brokerage is more than what your investments are. So don't do that. Okay. I'd say if there's any more questions, you're more than welcome to ask. But if you don't have any questions right now, I mean, you can always, as I said in all the other webinars, right here at the top, you'll see that we've got the need support function. So if you click on need support, it will give you this little support ticketing system. You just click on ask a question or request a technician, but it's better just to go for the ask a question. Type in your name, contact number, email, message, submit it, and then I'll phone you back or reply via email, depending on the question. Or you can go to contact us. Underneath contact us, we give you the address. You can come to our buildings if you want to visit us. There's our contact number, the support numbers. So there's 3 support numbers. Those are 24-hour support numbers, and then our 2 emails: info and support at sharetrackin.com, or you can send me an email directly to rudy@sharetrackin.com. Okay. Let's see. I see that there is another question. Okay. So that's it then. So then I'm going to do the same webinar on Thursday again, but it's going to be in Afrikaans. And then next week, Monday, the next English one would be on, I think, the golden, no, yeah, it's going to be on the golden goose or the SMS notifications. We'll see. So next week we'll do the next session after the basic 3. So if you want to see what the next session is about, obviously just go to training index. So the next one would be Sharetrackin and SMS. All right, so yeah, next week is the SMS notifications, how they work. Okay, and how to interpret them. So I'll see you guys next week. We'll discuss the SMS notifications. But for those that want to watch the Afrikaans video on Thursday, I'll see you then.